Welcome, everyone, to the TAC Index AI podcast weekend edition. This is where we blend, the deep TAC IP data, the reports, the charts, with all the latest news and logistics. And especially today, we're zoning in on air cargo. So our mission for this deep dive, let's unpack the very latest air cargo market dynamics. Let's see how they fit into the bigger macro picture. And really, what does it all mean for you?
Absolutely. And this isn't just about looking at numbers, this deep dive. It's really about feeling the pulse of global trade, getting into those nuances, those shifts that you often just miss in the headlines.
Exactly. Understanding the connections. And what's surprising right off the bat is some data that kind of challenges what we'd expect for this time of year. We're looking at the TAC Index data for the week ending August 11th, 2025. And here's the thing. The global Baltic Air Freight Index, the BAR0, it was up plus 2.2% week on week.
Right.
Now, that's a pretty healthy gain for the middle of what's usually the low season, isn't it?
It really is. And year on year, it's only down slightly, minus 1.8%?
Yeah, just marginally.
So that immediately makes you think, okay, why? Because normally the low season, especially summer, you get all those passenger planes flying for holidays, right? More belly hold capacity becomes available.
Especially on the transatlantic routes, yeah.
Exactly. And more capacity usually means, downward pressure on rates. So seeing a healthy gain now, it suggests something else is going on, either demand popping up unexpectedly or maybe some strategic capacity moves. The market isn't quite following the old script.
Okay, fascinating. So if the global picture is showing this unexpected strength, let's dig deeper. Where is this momentum coming from? Asia first. What about China outbound?
Yeah, China outbound. Definitely a mixed picture, which itself tells a story, right? Shippers making choices. Rates on the busiest lanes were actually a bit softer going to Europe.
Okay.
But interestingly, higher again heading to the U.S.
And any new lanes showing interesting moves?
Yes. From North Asia, we saw rates climb higher to India and Spain, but not to Australia. That stayed flat.
Got it. And the major hubs? Hong Kong?
Hong Kong, the BAI 30, saw a decent bump, up plus 2.1% week on week. Still lower year on year, about negative 7.1%. But what's interesting is those new BAI spot indices out of Hong Kong, they were creeping up day by day that week.
Okay, so real-time movement there. And Shanghai?
Shanghai BAI 80 also edged up a bit, plus 0.8% week on week, and about negative 4% year on year.
And we saw Vietnam rates higher both ways?
Yeah, higher to both Europe and the U.S. out of Vietnam. But then flip side, India saw rates actually fall in both directions, lower outbound and inbound.
Wow, okay. So quite a bit of variation across Asia. What does that signal to you? Supply chain adjustments, specific demand?
I think it's both. I mean, the mixed signals from China could be about prioritizing certain goods, maybe high-value stuff for the U.S. lane. But the contrast, Vietnam up, India down, that points more towards maybe ongoing shifts in manufacturing or sourcing. Companies hedging their bets, perhaps. Building resilience. For you listening, it really means you can't just rely on past patterns anymore. Agility and routing seems, crucial.
Agility is definitely the word. Okay, let's pivot. Europe and the U.S. What's the story there?
Europe outbound.
Yeah.
Rates were down going to China and Japan, but higher on the transatlantic lanes going to the U.S. So mirroring that China to U.S. strength a bit.
And those newer European lanes you mentioned?
Yeah, rates were lower week on week going to Australia, but surprisingly strong gains going to Brazil, Mexico, India, and South Africa.
Interesting diversification.
Suggests maybe new trade routes opening up or growing demand of those emerging markets, perhaps.
Okay, and specific airports. Frankfurt,
BAI 20 had a really strong week. Gained let's call it chunky, plus 6.6%. That actually puts it up plus 3.5% compared to last year.
Okay, positive territory year on year. And London,
BAI 40, that's the real standout. Another big jump, plus 8.5% week on week. And get this, it's now up an impressive plus 34.2% compared to this time last year.
Wow, plus 34%. That's huge.
It really is.
Okay, and U.S. outbound.
Rates were up again going to Europe, but softer towards China and most of South America. Except for that new lane we're tracking to Brazil. That one saw gains. Chicago, though, the BAI 50, it slipped back this week. Down about minus 4.9%. Still roughly flat year on year, minus 1.5%.
So London and Frankfurt showing real strength, but Chicago dipping.
Exactly. And that contrast, it really makes you wonder what's driving it, doesn't it? London's massive year-on-year gain. That feels like more than just market noise. Could be specific industry demand, high-value goods, pharma, tech, Or maybe just tighter capacity driving prices.
While Chicago's slip might mean things are more balanced there, or a temporary shift away.
Could be. These regional differences are so important for anyone planning logistics. It shows where the real heat is and maybe where the opportunities are.
Definitely. Okay, so that's the week-to-week pulse, but let's zoom out a little. What did the whole month of July tell us? Because you mentioned relative stability then, right? The global BI100 only edged up plus 1.5% over the 4 weeks to August 4th. Still slightly down year on year, but just barely, negative 1.8%. That stability itself seems odd for the low season.
It absolutely does.
Yeah.
Like we said, July should be slower. All that extra belly hold space from holiday travel, especially across the Atlantic, that normally pushes rates down. So the fact that rates barely budged overall in July, even before this recent weekly jump, it tells us other factors were already counteracting that typical seasonal softness. Something was propping things up.
Right. And our sources pointed to some pretty complex stuff happening in July. Lots of reshuffling supply chains and capacity shifts. A big factor mentioned was shippers anticipating changes, like the big one. The removal of the de minimis exemption for packages coming into the U.S., that kicks in August 29th.
Yeah, that's a major one. For anyone unfamiliar, de minimis basically lets low-value stuff, think lots of e-commerce, into U.S. without tariffs or heavy customs checks.
And removing that means higher costs, more hassle.
Precisely.
Yeah.
So you'd expect shippers to rush goods in before that deadline. And that anticipation definitely seems to have caused a lot of variation in prices between different lanes in July.
Can you give some examples of that variation?
Sure. Looking at those new BAI spot rates from Hong Kong during July, rates actually eased lower going to Europe, went from about HK $33.88 down to HK $32.62.
Okay.
But heading to the U.S. East Coast, they edged up from HK $36.38 to HK $37.34. And oddly, to the U.S. West Coast, almost no change. Started July at HK $35.81, ended at HK $35.46. So even from the same origin, different destinations saw totally different trends. That smells like strategic moves ahead of the de minimis change.
Right. So given that complexity, what were the competing theories about why China rates held relatively firm in July?
Well, there were sort of two main camps, you know. Some sources really leaned into the de minimis angle, shippers rushing cargo, maybe also hedging against potential future U.S.-China tariff hikes, just getting stuff moved now.
Preemptive shipping.
Exactly.
Yeah.
But others suggested maybe it wasn't just demand pull, but also a supply push. They thought maybe capacity was actually being reduced out of China, with planes strategically shifted to other lanes, maybe Vietnam, Thailand, Malaysia, where demand felt more robust or predictable.
So a bit of both, perhaps. Demand pull and supply management.
Most likely. It really shows how interconnected everything is. Demand, supply, regulations.
Yeah.
You can't look at one in isolation. Understanding which factor is dominant is key for making good decisions.
And tracking that capacity accurately must be getting easier now.
It is, yeah. The new version of the TAC space capacity tracking tool is helping there, especially in the Trans-Pacific lanes. Getting that near real-time insight is becoming crucial.
Good point.
And speaking of tools and data, it's also really interesting to see the new BAI spot methodology gaining traction. We're hearing about private trials now happening out of India and South Korea, and interest building for other lanes too.
So more transparency, potentially.
That's the hope. Moving towards more granular, real-time spot data across more markets could really improve visibility for everyone compared to just relying on older averages.
Makes sense. Okay, so we've got the air cargo specifics, the capacity shifts, the regulatory ripples. But how does this all connect to the wider macro market? Wall Street, global trade.
Right, because air cargo doesn't exist in a bubble, does it? And the broader economic signals have actually been fairly positive lately. Equity markets, for instance. July saw them continue to climb. The S&P 500 ended July back in positive territory for the year, and up a solid plus 17% over 12 months.
And more recently. Even higher, right? Record highs on rate cut hopes.
Yeah, as of August 13th, both the S&P and Nasdaq hit record highs. Traders seem fully convinced we'll get a quarter-point Fed rate cut in September. And the VIX index, Wall Street's fear gauge, hit its lowest level since January. So less anxiety in the financial markets overall.
Okay, so less fear, more optimism. Can that translate into air cargo demand?
It can, yeah. Especially if you look at what's driving the market recovery, a lot of it is the resurgence in tech, especially anything AI-related. Stocks like NVIDIA, AMD, Microsoft, they've bounced back strong since May, even with some competition concerns from China. And globally, Germany's DAX index has been a really strong performer, up around 30% year over year.
Why Germany specifically?
A lot of anticipation around faster growth there, fueled by big new government spending plans on defense and infrastructure. So when you see strength in tech, in defense, in major infrastructure projects. Those sectors often use air cargo for high-value components or time-sensitive deliveries. So yes, there's a definite connection.
Okay, so some positive macro wins. But it's not all clear skies, is it? We still have the whole complex world of global tariffs and trade tensions, renewed threats from former President Trump, for instance.
That's the other side of the coin. Absolutely.
Yeah.
And you have to ask, how do these trade winds or headwinds affect air cargo? Well, on one hand, the recent EU-US tariff agreement, that 15% rate on European goods, it seems like the market saw that as, well, maybe not great, but better than feared.
Yeah.
Avoided a worst-case scenario, perhaps.
Provided some stability.
A degree of it, yes. But the threat of much higher tariffs, like 30% or more, being levied by the U.S. against other places, Switzerland, South Africa, were mentioned that uncertainty itself is disruptive. It can make shippers pull cargo forward or hold back, messing with demand patterns and rates. Businesses hate uncertainty when planning costs.
So U.S. tariff policy remains a big question mark, but then Europe had its own trade. Like, stumbled, didn't it?
It did, yeah. It's a good point to bring up. While everyone worries about U.S. protectionism, Europe had what some are calling a free trade fumble. Essentially, the EU effectively stalled, or more or less killed, as one source put it, a huge free trade deal with the Mercosur countries, Argentina, Brazil, Paraguay, Uruguay, back in July.
And why did that happen?
Fierce opposition, apparently, from French President Macron, driven largely by French farmers worried about competition from Latin American agricultural imports.
Domestic politics trumping trade deals.
Exactly. And it's a really important reminder, isn't it? Protectionist pressures aren't just coming from one country or leader, they're global. And these decisions, whether it's tariffs imposed or trade deals blocked, they directly reshape global trade flows. That changes where goods move, which lanes are busy, which routes become less viable, all directly impacting air cargo. It's all interconnected.
Wow. Okay, that really does paint a complex picture. So wrapping this all up, it feels like the traditional low season wasn't very low this year at all. So what does this tangled web mean for you, the listener, trying to navigate it all?
Yeah, great question. I think the first takeaway is, yes, the market's volatile, but it's showing surprising resilience. And definitely strategic shifts are happening under the surface. So for anyone in logistics, you absolutely have to understand what's happening on specific lanes, look at capacity dynamics, the belly-old impact, the effects of things like the de minimis change. Don't just rely on the global average.
Know where the pockets of strength and weakness are.
Yeah, exactly. And secondly, global trade politics. Yes, it's complicated, sometimes feels distant, but it has direct real-world consequences for your shipping costs, your routes, your whole supply chain design.
So you need to keep an eye on those agreements and disagreements, like that Mercosur example.
You do, because being aware allows you to be proactive. Maybe map alternative routes, explore contracts on lanes that might be growing because of these shifts, instead of just reacting when rates suddenly spike. Comes back to that word agility, but informed agility.
Informed agility. I like that. Okay, so maybe a final thought for everyone listening. Considering all these insights, the weird mid-season strength, the shipper strategies, the push and pull of economics and politics, what does low season even mean anymore for planning? Are we maybe in a new normal where those old seasonal patterns are just less reliable guides? Should we focus more on these underlying currents instead? Something to think about as you plan your next moves. Thank you for joining us on this deep dive into the fascinating world of air cargo and the macroeconomy. We definitely encourage you to keep exploring these complex but really vital topics.